minimize using indicators to trade. Is very, very important. Minimize using indicators to trade, especially if you're a beginner starting out, because most of these indicators do lag, and once they do, you end up making streaks of losses and probably end up blowing that account. Okay, so for me, I don't advise you as a beginner to start using indicators. Instead, learn how to trade what the market is giving you. Trade what you see, because that's the best form of trading. Trading what you see on the chart. Okay, if the market is uptrend, buy. If the market is downtrend, look for sell opportunities. It's as simple as that. Sticking to an indicator will make you, not seeing things you need to see. At the end of the day, if the indicator is not actually telling you what you need to know, you end up blowing that account, or you end up losing. And you be like, and that same chart or that same trade is something that you are seeing that this is what the market is giving you. This is market is actually buying. But some of these indicators will tell you to sell, and you sell, and you end up losing. So, and that's why you need to make trends your friend. Make trend your friend, because when you make a trend your friend, actually you won't be too much bias over what the market is telling you, because you're actually seeing that this market is actually going uptrend. So you want to be buying, okay? You don't want to be selling the opposite, okay? And when you see the market is coming down, the market that is selling, you want to be selling as well. So that's why it's very, very good to actually make trend your friend. But what happens if that trend actually changes to another trend, or maybe breakout? We call it Trendline breakout. And that's why you need to watch this video to the very, very end, because I'm going to be sharing with you everything you need to know on how to trade Trendline breakout strategy, like the best strategy and the confirmations, as well as the tools to use if you want to trade a trend line that got broken. We call it Trendline breakout. Okay, so it can help you to actually maintain a good risk to reward ratio, and also help you to maintain the consistency of trading. So whenever you see such, you already know exactly what to do. You understand? You already know exactly what to do. So welcome back, guys. So my name is Cyril, and in case you are new to my channel, do well to hit the subscribe button, like this video, share this video, and actually drop your opinion in the comment section. Okay, turn on the notification bell, which is very, very important, because I'll be posting more updates on this channel. Like, I haven't even started. I'll be posting educational content to help you, be a better trader, or be making money in any part when it comes to cryptocurrency, and as well as forex trading as well. So we are going to be heading to my channel. So I'm going to be sharing with you everything you need to, like the tools and the confirmation you need, because you can't just see a breakout immediately and just enter the market. No, you need to actually confirm before you take that entry, which is your entry point. Is very, very important in this. So let's head up to the chart. Right? So basically, we have three major trends. We have uptrend, downtrend, and ranging market. So in this case, this is uptrend, right? This is uptrend. So of course, we all know how to confirm the validity of uptrend when the swing lows are touching, or having multiple touches on that trend line. Like if you draw your trend line, if you take your trend line twos, okay, and you draw it, and the swing low, this is swing low. This is what we call swing low. This one is swing low. This is 1, and this is swing low 2. Okay, this is swing low 2, 3, and these swing lows are actually called the higher, the higher lows. Okay, so I call it the higher lows, yes, because that's the lowest of the highs, right? So if these swing lows are more than 2 and are touching like more than 2 times on that line you have already drawn, that means, and the direction is giving you that upward movement, that means we are actually in an uptrend. So the trend of this market is actually uptrend. This is boom USDT on one hour time frame, right? So this is boom USDT. As you can see, the market started to move up from here to here. Okay, it started to go up. We have like how many swing lows here? 1, 2, 3, right? And this one is 4. Now, of course, the psychology behind trend line is that when we have multiple touches on the trend line, all right, that means we are anticipating for the price to break out to the downside or upside if the market is actually a downtrend. But in the case of uptrend like this, okay, now we are anticipating for the market to actually give us that, change of structure or change of character, which means it's most likely to break out. That's the psychology behind multiple touches on the trend line, right? Now, since we have already had this, okay, now we already know that, okay, 1, 2, 3, 4. Let's anticipate. We don't want to take a buy signal right here, because we don't want to take a buy signal right here because of what the psychology behind this whole stuff, okay? And currently this is also a supply level. This is also a supply level here. So we're anticipating for the price to break the trend line. So immediately the price actually break that trend line that we've drawn. Okay, immediately the price break out like this here. You don't rush to take a trade. Don't rush to take that trade. So most of you guys, immediately you see that breakout, this red green candle like this, you rush to take that trade. No, like I said, we have fake breakout as well. Okay, so you don't want to end up making that wrong decision that will cause you to lose. At the end of the day, you say, oh, wow, I could have done like you start blaming everything. No, so wait for after this breakout that happened right here. Okay, you now wait for retracement. Now while waiting for your retracement, immediately you see this red candle closing and the green candle opening as well to serve as a retracement. Okay, now you need to use what we call Fibonacci retracement 2. Okay, this will help you to know where the price is most likely to actually reject that zone. The price actually reject to actually further down. That should serve as your entry. Now if you pick your Fibonacci here and you put it at the swing high, okay, because this is like a breakout right now. Okay, we are about to enter the downtrend, right? We're about to enter the trend is about to change to downtrend, from uptrend to downtrend, right? So you pick it like this. Okay, you draw the Fibonacci to the previous to that current swing low, right? This is the current swing low right here, right? So what the market is giving you right here, what is Fibonacci is giving you here? Okay, it's giving us the 50% Fibonacci level. Okay, this is 50% Fibonacci, which means price is anticipating to actually reverse downward, like continue the trend, the downtrend, right? Because after the retracement, if you trace to that 50%, which means it's giving us that idea that okay, this is where the price is most likely to start continuation of the downtrend. Right now, of course, there are two levels that I anticipate here: the 0.618 level and the 50%, which is 0.5%. Okay, 0.5 and 0.618. These two levels is what I anticipate. Like these two levels these are what I anticipate. In fact, based on what the market is giving me, this is what I will use to enter the market. Right now, if I go to 15 minutes time frame right here, this is 15 minutes time frame, right? Let me increase this. Okay, this is 15 minutes time frame, as you can see. Now, for me to actually, because I have not gotten that 50% or 0.5%, 0.5 level of this Fibonacci 2, it's not really okay for me. You know why? Because I need to actually look for that support that got broken, that made the trend line to actually break out. I need to look for that support. Now, where do we have that support? Where do we have that support? We have it right here. This is the support right here. All right, this is the support. So this was our previous support. Here is our previous support. But getting to this particular area right here, it break out. So which means I'm not looking to take my entry on that 0.5 or 0.50%. No, I'm not looking to take my entry there anymore. Like I'm not looking to short the market for me to continue what the trend is giving me, which is the downtrend. Okay, now I'm looking or anticipating for 0.618. I'm anticipating for 0.618. Why? Because it's actually closer to that breakout support. Now the breakout support, now we are anticipating for it to turn to resistance. Okay, so the resistance now, you know what happened on the resistance? Selling. So right here, so let me just delete this. I've gotten my confirmation on 0.618 as my confirmation. I also gotten it on the support level that got broken. And 3, I already seen that the trend line got broken. So from uptrend, we are about to enter downtrend, right? So let me delete this. Let me delete this Fibonacci 2, right? Let me delete this, right? So here, I'm going to pick my short position right here. Put my short position, place it on that 0.618 level, which is here, right? So my stop loss should be above the high, previous high, okay, above the previous high like this, or maybe the exact point of that previous high. So my take profit should be, I should be targeting 2:1, right? That should be my target. I should be targeting 2:1, which means I'm risking 1 to make 2. So do you see, guys? So if you actually analyze this way, you see, I didn't use any indicator here. I didn't come to indicator and say, okay, mark this one, this one, this one. I'm just reading what the trend is giving me. Is the trend up or down? What is happening? What exactly is happening? Exactly. Okay. So if this trade now, Anybody that took this trade now will have made at least 2:1. Like if you're raising $100, you're literally making $200. If you're risking $1,000, you're literally making $2,000, okay, of your risk. So as you can see, targeting 2:1 is a very good one. Now, if I decide to actually minimize my stop loss like this, okay, or maybe put it around this particular area, so I'm going to be making more than 3:1. I'm going to be making more than 3:1. So I hope this makes sense, right? Don't forget to subscribe to this channel, right? Just hit the subscribe button, all right? Turn on the notification bell, like this video and share it. So if you learn one or two in this particular video, if you learn, or if there's any strategy you want me to talk about, drop it in the comment section, right? I'm going to talk about it. Okay, we are here to make money in this crypto space, all right? Whether you're trading crypto or you're trading forex, anything technical analysis, anything trading, okay? That's what we are discussing on this channel, and anything how to make money, okay, in areas of trading. That's what we're going to be discussing on this channel. If you're not yet in my community, okay, click the link in the description of this video. There's a link in the description of this video. Join my community. This is where I will be dropping signals, crypto future signals. We are going to be going live, doing a lot of things together to make money in this space. All right, this 2025, you're not dull in it. Hope you know that. Guys, peace out.